Well, hi there folks, it's Matt Hasten here looking at this week's property market. Well, the record run of cash rate increases has continued during the week. For the 9th consecutive RBA board meeting, they have lifted the cash rate to 3.35%. Now looking at CoreLogic data, national capital city values, they're down by 10%, but Sydney is leading the charge in that space, down by 14.1% since the cash rate lifting cycle has commenced. Now writing for the Australian Financial Review and also for Livewire Markets, Christopher Joy believes that the great property drawdown will continue and the property values will be down between 15 and 25% by the time this cash rate lifting cycle has concluded. Now, it's always very interesting to review the minutes of the RBA board meeting when they do meet, and in this instance, they were quite hawkish, particularly commentary such as the board expects further increases to interest rates over many months in order to bring inflation back within their target band. Now, this would suggest to us that potentially a cash rate of 4% is on the RBA's horizon. It was previously predicted that the cash rate may pause at 3.6%, but if they did lift the cash rate to 4%, they seem fearless that this could plough the Australian economy into a recession in order to curb inflation. However, can this RBA messaging and rhetoric be trusted? We do know they are guilty in the past of overselling their message, sometimes to stimulate the economy and in this case potentially to cool down consumer sentiment. We only have to look back a matter of months ago to the now famous "we won't be lifting the cash rate until 2024", and they also suggested that inflation in Australia is going to be transitionary and nowhere near as bad as other global economies. We now know they both were highly wrong, as we're now in the midst of one of the fastest and highest levels of cash rate increases in Australian history, and inflation is running rampant at near 8%. But sometimes they could be talking a tough game, and this has the effect of reining in consumer spending and almost the effect of a cash rate increase without actually delivering one. So if you look back at their track record over the last year, 2 years, 5 years, you'd be foolish to think that this isn't part of their game plan. Now, looking around the grounds, flying in the face of what would be considered potentially a cooler market conditions, we're continuing to see a huge volume of buyers attending our open home inspections. Last week, a number of properties drew in audiences 40 or 50 people, which would almost reflect boom time selling conditions. Perhaps it was the beautiful weather. Perhaps many people are just monitoring the market to see what is unfolding. And perhaps many people are actually seeing better value coming to the surface and want to get involved in a purchase. We're not seeing many properties going under the hammer just yet. Just 498 properties going under the hammer across the city last week for an overall clearance rate just above 52%. But we're starting to see those auction volumes tick up each and every week. We're also seeing better quality property coming onto the market at the moment, and buyers are responding and engaging with that. So that's what's unfolding in the market at the moment. Pretty interesting stuff, and our entire team looks forward to seeing out and about. Thanks so much for watching, and I'll catch you all next week.